Hello, everybody. Welcome to the Fundamental Analysis webinar this evening. My name is Troy. I'm a Senior Account Manager with AvaTrade. I'll be leading the session. As we get going, let's do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. Just waiting for a few more responses before we get going. Type OK in the chat box if you're hearing me clearly and seeing the screen all right. Okay, great. I've got enough responses. Looks like we're up and running fine. As I understand it, we've got a new user interface. The marketing department and the powers that be decided to switch the interface up a bit. I think all should be easy and simple to use still. Maybe some improvements, I don't know. I actually haven't seen it from your side, but I'm told everything will be great. So yeah, that's the chat box. That explains why Brooklyn, yes, that's the chat box. That explains why the responses were delayed. So Natalie, everybody else, I guess you found the new chat box. So we've overcome that hurdle. Great. Now the fundamental news today is interesting. We've got two polar opposite forces moving the market up and down, which has been a great trading day for ranging type movements that you know, your buy limits and your sell limits that are, you know, buying from the low point and it goes back up, selling from the high point and it goes back down. And that was maybe easy to predict through the day today because we knew what the two driving forces were. And there was a mix between the direction the market opened and the direction it moved. There was a mix between the volatility index and the direction the futures were moving. So you could see it right from early in the day that it might be a ranging type of day, at least for a large part of the day. And it was easy to take advantage of if you were able to spot that fundamental setup moving into the day. We'll take a look at some of the charts in a moment and some of the news that's driving things. Keep in mind as we go forward that obviously no one trade is guaranteed to bring you profits. There's a risk of a loss of funds with each and every trade, but obviously we all understand as well that there's a good potential for profit with each and every trade as well. So that's why we're all here, is to manage our risk in some way that makes sense, whether you're using stop loss marks, hedge trades, maybe AvaProtect, which I'll show you all briefly as we get going. In some way managing your risk, because certainly there is risk with each trade that you take. As we go over things in the webinar, keep in mind it's coming from an educational perspective and is not meant to be taken as financial advisement. Now, fundamental analysis, what is it? It's basically the news. What's happening in the headlines? What's the recent news that might cause certain assets to strengthen or weaken? And you can get a read for the sentiment in general by looking at the fundamental news, and you can get a read for specific assets as well by looking at certain announcements like scheduled economic announcements. And we list here on the slide two types of fundamental news, basically: regular economic events, which we'll take a peek at a few. That's really not what's moving the market today. Regular economic events would be like scheduled factory production numbers, you know, GDP numbers that come out, things that you know exactly the day and time and the country that's reporting those numbers. That's easily found on an economic schedule, and we'll take a look at one real quick as we're looking at the fundamental news. And there have been some announcements today, some better than expected, some worse than expected. But really, it's the other type of fundamental news that's driving the markets today, the extraordinary economic events, two of them to be specific. One being the vaccine distribution starting in the UK, the first country really to provide it. I think it was a 90-year-old woman that was given the very first dose, and obviously we all hope she's going to do well with it. The high-risk populations are getting it first, and there's excitement about that on the markets. That's really helped the markets recover after a weak opening today. So that's the extraordinary type of fundamental news that's driving markets up. The other extraordinary news, yeah, 92-year-old, oh, someone's telling me I'm off, 92-year-old man. I saw an article about a 90-year-old woman. So maybe it's two different people in different areas we're talking about. But in any event, it was an older person, higher risk population, and that's the groups that will be getting it first. Now, the negative story that's working against that positive momentum with the whole vaccine development, the negative story is the virus is spreading like wildfire. So we've got the U.S., namely California, some other areas in the U.S., locking down the economies again, as much so as it was when this pandemic first started spreading. People aren't allowed to go to their friends' houses. They're not allowed to go to restaurants are closing down, etc. And there's a lot of fear about the economic damage that this is doing, already has done, and many are at their breaking point business-wise. Many small businesses are saying that's it. They're going to have to close their doors and go out of business. So there's a lot of fear out there growing in the U.S. a lot, and also in other areas around the world as the virus is spreading worse through some European areas, UK, and other areas of the world. So those are two polar opposite forces fundamentally on the markets today. Positive momentum about the vaccine and also the stimulus that might come in the US. That's a third one, I guess. And then the negative fear that's being created because of the spread of the virus getting worse again. So let's take a look. Now, on our website, I mentioned AvaTrade Go being our mobile app that has a feature called AvaProtect. Also, our web trader platform, which you access here by logging in, has AvaProtect as an option too, as you're managing your risk for a small premium cost to add it onto your trades on gold, silver, and FX pairings. Now, the platforms are listed here. If you go to AvaTrade Go with your mobile, click on this link, it'll take you to the download from your app store, whether it's Google Play or Apple App Store for the AvaTrade Go app. It has the AvaProtect feature. You see the gold symbol on gold, silver, and FX pairings. That means it's available. You pick the length of coverage. It tells you the premium cost, and any losses you have during that cover time period are added back to your account if the trade goes bad. If the trade goes good, you get to keep all your profits. You just paid the small premium up front. So it's a nice feature as part of your risk management plan to consider using it as a tool. Certainly, maybe not appropriate on each and every move that you make, but if you expect some volatility, it could be a nice feature to maybe take advantage of. Now, the features that you see on the app where it calculates your risk to your stop loss, your risk to or your potential profit to your take profit as you put the prices in, it tells you the numbers, it calculates it for you in the order window. Same with your margin requirement. All of that the app does, also the web trader platform does. And so if we go to the web trader platform, and by the way, I know we get a lot of new traders to these webinars and also experienced traders. So I would ask all of you to hang on through the webinar because I'm covering enough basic stuff that I think it's very beneficial for many of you don't even have a live account yet. It's beneficial for you as well as experienced traders as we go through some of the more interesting strategy concepts that we'll go through. So I ask for all of you to hang on as we go through some of these different features and ideas. Now, I mentioned AvaProtect. So if we go to an asset like gold that has it available on it, so let's say I'm buying on gold, and by the way, this web trader platform is an interface that allows you to trade on your MT4 or MT5 account right from here. So this is trading on an MT4 account. It's not a separate account to use the web trader. It's just another option for trading on your existing account. So but it has useful features that the MT4, MT5 doesn't have, like AvaProtect. You can put on your trades. You'll see the trades still in the MT4 or MT5, but now you'll have protection if you put it on when you take the trade. If you're using a demo account, this feature's grayed out. It's not active. The demo accounts don't have it. It's a premium service, so it's only available on the live accounts. So as we look at this, let's say I wanted to trade, I don't know, I thought maybe I wanted to trade 10 ounces of gold. So 0.1 lot size tells you that's 10 ounces. Here's the amount of margin that's required. I might say, okay, that's all right. I have almost 2,000 in my account here. Looks like I have a trade running. We'll take a look at that in a moment. And so I say, okay, I'm okay with that trade size, only 93 has to go to margin to open it. It tells me up front. Then I go down, I say, okay, let me put my stop loss. Maybe I want my stop loss down at 1850 in the price. So maybe I come here, I put 1850, and then I look and I say, whoa, look at my possible loss, $672 converted to my account currency. Whether you have euros or pounds, it tells you in your account currency how much you're risking. So I might say, well, geez, 200 would be 10% of my balance approximately of my equity. And so maybe I say, I don't want to risk that much. So I lower my trade size. Now, as I lower the trade size, you see it tells me my risk. Okay, so I'm lowering it down. Maybe I decide, okay, 3 ounces is enough for me with my stop loss that far away. If I got a signal from somewhere that said, put your stop loss at 1805, I've got my stop loss here, and I look and I say, I'm risking 200. Now, I had said 1850 and mistyped that. So let's go back. Let me put a 5 here. And then I say, if that's my stop loss, 1850, then maybe I can do more ounces. So I put 10 ounces and I say stop loss at 1850. I'm only risking 219. So now when I've got my stop loss price where I want it, I've got my trade size adjusted so I have the risk I want. Maybe I only want to risk 100. So now I have to lower the trade size until I see the risk show. There we are, possible loss 88. Maybe that's what I'm comfortable with. So you can go into your trade knowing how much you want to risk and calculate it here and with your trade size and your stop loss mark. Then what you can do, put your take profit. Maybe I want to take profit at 2,000. Maybe I think gold will rise to 2,000. So then I say, oh, that's a nice ratio. 510 potential profit to 88 potential loss. I could be wrong 5 times and right once with a move like this, and I'll still profit with that risk reward ratio. Okay, so now I'm in full control of understanding my risk with my trade size, with my stop loss, with this platform, with the AvaTrade Go app or the web trader platform. I know before I buy to my stop loss price, assuming there's no slippage past or it doesn't gap past, if it closes at or near this price, that's my risk. Okay, now what if I say, you know what, I'm afraid it'll hit that price and then go up. I don't want it to hit my stop loss and then it goes the right way and I lose even though it went the right way. So I say, well, maybe I'll use AvaProtect then. Instead of putting a stop loss right now, maybe I'll just say, I'm going to hold this trade for 2 days. I only have to pay $48 and change up front for that protection for 2 full days. It could plunge $100 an ounce the wrong way. If that 2 days ends and that's $100 an ounce the wrong way and I'm down $1,000 or $2,000, all that gets added back to my account when I either get stopped out or when the protection period ends. Then I can let the trade keep running or reopen. Okay, and then I can put a stop loss. So that's an option if you expect a lot of volatility, like maybe we expect right now, right? Could be stimulus coming in the US, which would weaken the US dollar more probably and maybe cause gold to go up with fear of the inflation on the USD. Markets could rise as well with more stimulus. If they have no agreement this week in the US on the $1 trillion or so stimulus they're trying to pass, maybe we see the US dollar strengthen and maybe that pulls the gold down. So we have all of these things that could happen. You don't know for sure what those headlines are going to be. which way are those stories going to go? So if you just know that there might be huge movement, but you're not certain which way, maybe you think up more, so you're preparing a buy, but you protect yourself on the downside with AvaProtect for even up to 2 days of time. That could get you close enough to, they're expecting by Friday they should have a decision in the US on the stimulus. And also any new vaccine news, anything that could shake the markets, you're protected for that cost, which is taken up front out of your account. Naledi, good, I'm glad. Yeah, the stop loss tool, also beyond AvaProtect, being able to calculate your exposure to your stop loss price and to play with the trade size until you get the amount you want to risk. It's great for beginners and also for experienced traders, because it's a pain to have to manually calculate your exposures all the time. Even if you're experienced and know how to do it, it's easier to have the platform do it for you. I'm curious, my open position I have here, it's a NASDAQ move. So, maybe I say, okay, I take my profit on NASDAQ. You go here, close position. Very simple. This platform's very easy to use. And so as we take a look at the fundamental news features on this platform, on live accounts again, premium feature on live accounts. This used to be a paid service, Trading Central. AvaTrade covers the cost now on all live accounts. The economic calendar is available on the demos also, but on the live accounts, we can look at signals. Here's analyst views. Okay, this is technical analysis done for you. It has the chart, it shows you the support and resistance levels, shows you which way the breakout is expected to move. Basically, live trading signals for free right here. Breaks down exactly what indicators were used and the price levels and what the move is expected to do. This one may fall 17 to 32 pips. Talk about a specific signal. And it gives you the time that signal came. And there's all kinds of assets, okay? And then also we can take a look at some fundamental news through Trading Central, like market buzz. And there are some other options there as well. The biggest trending assets have the biggest bubbles. So Pfizer, we understand why it's trending. The release of the vaccine. Apple, it's Christmas season. They've released some new products. They're trending, and so on. Tesla, big news today. Negative news on Tesla. Tesla fell down, not because of bad business, but because of something they're doing business-wise with raising funds. So we've got some news on Tesla that you could take a look at. How do you get to the article? Just like that. Boom, takes you to the website that has the article, and there we are. So you have at your fingertips fundamental news on the most trending assets right here in the platform. Now, you can play with the chart on here as well. You can go full screen. Easy to make a favorites list. Okay, if you want to remove something from your favorites, just click the star, it's gone. If you want to add something to your favorites, maybe go to the most rising. You say, oh, Exxon looks good. Let me add that to my favorites list. Just click the star. And now Exxon is in my favorites list right there, Exxon favorites. So lots of categories, most selling, most buying, most falling, etc., or by type of asset, crypto, commodities, etc. Okay, so let's take a look at the fundamental news. Wall Street opens lower as today's lockdowns overshadow tomorrow's cures. Okay, that's a nice headline. Naledi, I'm glad you appreciate the new platform and the features we added, and I think we'll have more additions and improvements to our technology and offerings into the next year. So what we're looking at here is how the market opened. It opened lower because they're saying the lockdowns, because of the increased spread of the virus, was overshadowing the cures with the vaccines that are coming. So, and that's exactly how it opened. But look what happened. Everything flipped. Everything went green. Futures are green. Market opened green, or opened red, but moved into the green almost immediately. We've got the volatility dropping, fear dropping, volatility dropping, and markets all in the green now. So talk about a flip from the open. So it's a very interesting trading day. Two opposing forces. It looks like the momentum about the vaccine is overpowering the fear of the spread, because maybe it's viewed as the spread of the virus is more short term. The vaccine is long-term positive news story that moving into next year, investors are looking at more long-term buying and saying, wow, it's going to be great next year, January, February, March, as the vaccine is distributed. And maybe that's why the momentum of the positive story is overpowering the negative news of the virus spreading right now. Just my take on it. Now, we look at some other things. There's some news about Pfizer. Obviously, they're going to be strong, potentially Moderna. And then we go to the other articles and we say, here's the story out of Great Britain. And I knew I was right. What I read, 90-year-old British woman became the first outside of trials to receive the shot. So whoever's telling me it was a 92-year-old man, we've got opposing stories, but that's okay. It's the same idea. They're giving it to elderly first, and then they'll expand the distribution as fast as possible to other populations that are high risk and to the lower risk populations eventually. But there's a lot of momentum about that. And there's some information here about Tesla as well, something they did with revenue and raising money, and that's hurting their stock value in the short term. So we'll take a look at Tesla. We'll take a look at Tesla and see there might be some opportunity there. If Tesla had a pull down just because of a financial maneuver, but everyone knows Tesla's been so strong of late, maybe there's some opportunity there to get in with Tesla if it took a dip. We'll take a look at the charts. But we see the headlines matching exactly what we already talked about. Americans in housing freefall. There's been a housing boom in the U.S. with buying new houses and mortgages because of the low interest rate, but many are having trouble paying their mortgages now. This guy's an owner of a unit who was renting to people who don't pay him, so now he's going broke and can't pay his mortgage, and it's an effect that could be like a domino effect within the economy. They're really worried about another lockdown right now in the U.S. and other places around the world, the effect that this could have if there's a full lockdown of restaurants and small businesses up and down the big city streets and even small town areas. So Wall Street slips on rising coronavirus cases. It's the same headlines. I'm looking at multiple sources, so we get the feel here. Tesla drags NASDAQ lower. We already mentioned Tesla. U.S. gas prices stumble on mild start to winter. That could be an opportunity, okay? Mild start to winter doesn't mean winter's not going to get cold, but U.S. gas prices stumbling at the start of winter could be an opportunity, just like with Tesla, okay? And that takes us back where we were. So let's go ahead to the platform. We'll get on my demo account. We'll look at some of the live movements here. We'll work some strategy concepts, and maybe you find some opportunities you're interested in trading on. Now, there's no wonder with the US dollar weakening like it has, and let's pair up gold against the dollar index. We can see if we look at the US dollar index, say 1-day candles, look at this drop in the US dollar value versus the US dollar index is the US dollar paired against a basket of other currencies like Euro USD, GBP USD, USD Swiss franc, etc. And so overall, as a basket comparison, the US dollar has plunged against the other major currencies. And you see this drop is huge. These are 1-day candles on the dollar index. Now, if we zoom in, well, first we can look at 1 week. And if I expand the US dollar index, you can see here, look at this support level down here. Support up, support up. The price didn't break. This was back in 2018. If you look at the date, the price couldn't break below 88.22 when there was pressure on the USD back a couple years back. So now we look and we say, even though the USD on the 1-day candles, if it looks like, wow, it doesn't have any room to fall anymore, look how much it fell. If we look at the 1-week candles, we see that's not true. The US dollar could continue to drop. It's not that long ago, a couple years back, the US dollar went all the way down to this support level down here. So what do you think happens to the USD value if another trillion in stimulus is passed in the US this week. Fundamentally speaking, what effect does printing another trillion US dollars and handing it out in the US as stimulus, what effect does that have on the value of one US dollar if you print a trillion of them and pass them out? What happens to the value of currency as you print more of them and hand them out as stimulus? Any input? Amir, thank you. Yes, I'm doing well. Yeah, it's inflation. And what happens when there's inflation on currency? What happens to the value of currency if countries are printing trillions of dollars and handing it out? It drops, right? Just like anything. If you found 10 million diamonds someplace and started handing them out, well, the value of diamonds would drop too. It's the same thing, only you can't print diamonds, right? So they're printing currency and handing it out to help the economy. Okay, great, but money becomes cheaper then, right? Interest rates are already near zero. And now they're going to hand out potentially another $1 trillion to small businesses, to governments, to cities, who knows? So they've already handed out something like $4 trillion, which has driven the US dollar down. So here it could come again. Now, Wall Street loves that. And so does Main Street. To get loans for your small businesses, for corporations to get lower interest loans, for money to be cheaper, great. That's why NASDAQ, Dow Jones, and any global indice would rise in response to large stimulus. But the value of the currency that's being given out tends to drop. So if the listen, I'm not a big trader on the dollar index itself, but using it as a guide as to what other assets might do, right? So good question. So if we know there's room for the US dollar to drop without having to break the support level, the US dollar could drop more. So there's no resistance here yet. The dollar could drop more. What happens to gold as the US dollar drops? Look at the flip. What's gold been doing as the US dollar's been dropping? Let's look 1-day candles, 1-week candles. Look at this. What's gold done? Up as the US dollar has gone down, right? Up, up, up. These are 1-week candles compared to 1-week candles. We see gold went down during the same time period. I mean, gold went up as the US dollar went down. You see that connection? US dollar down on 1-week candles, gold up on 1-week candles. So the idea here is if the US dollar drops more, what might gold do? If you look at the pattern that exists over the last year. Gold is paired against the USD, by the way. So if the US dollar's weakening because of inflation, because of stimulus with the USD, if the US dollar's weakening, doesn't gold rise easier? You'd think that's what it's paired against. Also, just the simple fact, not just because the USD would get weaker, but gold investors many times fear inflation. Gold is an inflationary, anti-inflationary investment tool, meaning trying to get away from the dangers that inflation can cause. If the currency is getting too weak, people tend to buy into safe havens like gold. Okay, so just something to look at. That okay, we see the relationship. Weak USD all year long, USD dropping all year long, gold going up. Okay, now if we then expand gold out and say, okay, this week, don't we expect stimulus to be announced in the US? That's what they keep saying. So then we look and we say, okay, let's look at the smaller candles then. Okay, gold bounced on the 1-week candles off this support level right there. You see a clear support level. Resistance, breakthrough becomes support right here. This old resistance, right on cue, gold bounced off that support level. The old resistance becomes support once it's broken. So it hit here and bounced. Now gold has reached the next resistance level here. This was old support, broken and dropped, and up it comes at the resistance. So if gold breaks above this level here, this resistance, you could see gold rise to the next major resistance level, which is at the recent high up here, above 2,000 an ounce. Okay. So we're looking at potential when we trade, right? There's no guarantee that gold's going to go up to 2,000 an ounce. There are some things working towards that. At the end of each year, traditionally, there's a sell-off of equities many times and a buy-in into safe havens like gold. Profit taking out of the equities, the stocks, occurs many times at the end of the year, and that creates bullish pressure on gold. Also, we've got the factor of maybe stimulus being released this week out of the U.S., which would weaken the USD and cause more inflation and maybe more gold buying. So you can see the potential. If gold breaks this level that it's at now, this resistance level, you could have a breakthrough that could rise towards 2,000 an ounce. So pending orders, if we zoom in then on 1 hour candles, you see it broke a resistance level here, gold did today. Resistance, resistance. If you had a simple pending order above this resistance, a buy stop pending order, say if it breaks the resistance I'm in, okay, this was yesterday. It broke the 1850 level right here. Once it broke that resistance, boom, you could have been in with a buy stop. You're already $20, $21 an ounce in profit. Now it's doing it again, isn't it? Resistance, okay, resistance, resistance, resistance. It just tried to break it, came back down. It's trying to break through again. Well, here's the line I just drew where you could prepare buy stops. Why would you buy from a higher point? That's what a buy stop pending order is. Why would I buy from up here? Because a breakthrough of the resistance level that we drew on the 1 week candles is right here. That's the 1 week candle resistance level. If it breaks to that level, that means it had enough momentum that it broke a resistance level that's been there for weeks and weeks and weeks, right? So what would be the driving factor that gold might break that resistance level and trigger a buy stop trade up here, a buy position? Could be stimulus this week, could be something else. Remember, fundamental news has two types: the known kind, the economic announcements that are coming, and also the kind that can break at any time, that you just don't know what it'll be or when it will be. Now, we do know stimulus likely will pass this week. So a buy stop pending order here could make sense. Any questions on that? What is the lagging factor? Will gold decrease as an effect of a decrease in dollar price? What we've seen, Brooklyn, is as dollar price drops, we actually see gold climb, right? Their inverse relationship. That's what we looked at here. As if we go back to the 1 week candles, as gold went down over the weeks, as the US dollar went down over the weeks, gold went up, okay? So if you find a situation where US dollar dropped for 2 weeks and gold didn't go up yet, you might call that a situation that's opportunistic, that you think gold is likely to spike up because the normal relationship didn't happen yet. One of them moved and the other didn't react yet. One could lead the other. There's no rule as to which one would lead. But if one made the big move and the other didn't make its expected move yet, for example, if the US dollar index drops another large percentage and gold happens to be at a low point and didn't spike up yet, you say, wow, this is an opportunistic spot. I could take a shot at buying on gold if USD dropped today and gold didn't spike up yet. Because you look at the pattern, you say overall in the bigger picture, gold keeps climbing as the USD drops. So if you can find a time where gold went down, US dollar index dropped, but gold didn't spike up yet, that could be your strategy to find where you expect the inverse relationship, but the inverse didn't happen yet, if that makes sense. Good question. Niletti's asking on gold, if you felt that gold is going to break this resistance, why not buy now? Why wait for the higher point? And the answer to that is confirmation. By breaking the resistance, you get a confirmatory movement that, the fundamental news must have hit. They didn't last minute say, you know what, no deal, no stimulus, because that could happen. And then what would happen? Gold might plunge as the US dollar strengthens, right? So if you get in before the breakthrough, you're risking that the breakthrough might never happen. If you get in after it breaks through the resistance, many times what you get is a breakthrough candle that continues, like this one. Look here, the last time it broke this price level, look at the size of the candle and the momentum that it had. It didn't just break through and go sideways. It broke through and went up drastically in that day and the next day and the next day. Rapidly went up. So when major resistance or support levels get broken, many times you see momentum, a momentum that can carry the movement further. Okay? There can be false breakthroughs too. That's why you put your stop loss maybe just back below. If you get in up here with a buy stop, you put your stop loss below. Here, I'll do an example. So pending order, and by the way, on the web trader platform and AvaTrade Go, when you're doing a pending order, you don't have to tell it what type. You just tell it buy from X price, and if it hits that price, it buys. Here on the MT4, you have to tell it buy stop. You have to know, oh, buying from a higher price is a buy stop. The web trader platform knows that. You just tell it buy from whatever price, it makes it the right type of pending order. But buy stop buys from a higher price. So we might say, okay, if it hits 1900.1 or 1900.5 or 1901, then you're convinced it broke the resistance and it's not a false breakthrough. So maybe I'm going to say at price 1903. So I'm convinced it certainly broke past the 1900 barrier and past this resistance level right here. Okay, that we see was old support, 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 breakthrough. If it gets above the 1903, maybe I'm convinced that that's a true breakthrough. Then I put my stop loss back below at maybe 1880. And I put my take profit up at the next major resistance. Maybe the round number I'm going to use is 2000 for my take profit. Okay, so there's my buy stop. What am I risking? I'm risking about a quarter of my potential profit. My potential profit is up here at 2000. You might say, well, if the major resistance is up at 2050, why take profit at 2000? That's up to each individual trader, right? Maybe I want to get out at that mental barrier of 2000 because maybe I think at that spot there'll be a strong pullback. Okay, many times at round numbers like that, there's a natural resistance where people will sell off or buy as it reaches a round even number like 2000 in this case. So maybe just before 2000 or right at 2000, I take my profit. This is my entry on the buy stop at what price do we have? 1903. So I'm looking at nearly $100 per ounce potential profit, 97, and I'm risking 23. So almost a 4-to-1 ratio, about a 4-to-1 ratio actually, potential profit compared to risk. I only need to be right on a move like this 1 out of 3 times and I make a nice profit. Okay, very simple. You don't have to stress out over it. There's stimulus coming. There's a vaccine on the way that could work against gold climbing maybe. But right now the stimulus is inflationary pressure, could drive gold up. End of year trends each year maybe in your favor for gold to climb. So you take a shot at it, knowing there's no guarantee. But if it breaks this resistance, maybe you see a climb just like it did this time. Look at the last time it broke the resistance. This is your last example. It went flying up to 2050. So if it breaks it again, maybe it climbs to 2000 without any trouble. Okay, fundamental news makes sense behind us on that. Technical breakthrough with a stop loss just below the breakthrough then is the technical side of it. Okay. Good question on why not take the trade now. And it's confirmatory. What about crude oil? What do we think is happening with crude oil if the markets are kind of responding positive right now? Look, oil's climbing, right? It's expected that that oil might climb. So as we go to 30-minute candles, we say, okay, it's had a little bit of a pullback in the past few days. There was some anticipation that all the OPEC and OPEC plus nations would agree on continuing the production cuts, and not all of them completely agreed to that. And that helped pull oil back down for fear that Russia or some other nation might increase production again during a global pandemic that's getting worse again. That fear of increased production potentially coming on oil drove oil prices down. Now, I don't think anyone has really increased production yet. They just didn't all agree that they wouldn't. So we could see a bounce back up in oil. If there's positive momentum about a vaccine, that could drive oil up. But what's working against oil climbing? The shutdown of major economies, right? That's not good for oil demand. If countries around the world are closing up shop again on their economies. So to buy on oil right now might be tough, but pending orders can work well. We see over the past hours today, a support level formed. And remember I said today was a good trending day, or I'm sorry, ranging day, where the markets were going up and back down, up and with these opposing stories, right? So if you laid down your support and resistance lines on oil today, look at this. This is just today. Buy off of this support level, profit. Sell it when it reached the resistance. Sell off the resistance level, profit. Take your profit when it reaches the support. Buy off the support level, profit. Sell when it reached the resistance. So what's the move now? It's obvious. Sell on oil off the resistance. Why? Fundamental news says people aren't so happy right now about, oil investors aren't so happy about major economies like the US and the UK and other places locking up because of the spread of this virus getting worse. Yeah, Natalie, and I know you're from Russia. You're saying Russia's going to increase oil output in January, and just in anticipation of that, that's what helped pull oil down already, right? The fact that OPEC plus, the plus part is Russia and any nations not part of OPEC. They couldn't agree that they wouldn't increase production, or that they wouldn't increase production, or that they would maintain production cuts, and that's what pulled oil down. So right now, the fundamental news says it's ranging. There's nothing that's able to make oil break through this resistance yet today, unless the unexpected headline comes, right? But right now, to trade the range would have been working all day today. Resistance to rising. Why? Because of fear of production increases on oil and spread of the virus that's happening all around with economies being shut down. Not breaking the support level. Why? Because there's a vaccine being released and there's optimism about economies eventually opening up because of the vaccine. So sell from the high, buy from the low. That's what's happening here on oil. It's worked all day long. So there's a potential move. Where would I put my stop loss as I just sold on oil? Where might I put it? Where would make sense? Above this resistance, right? If it breaks through, then maybe there was one of those headlines that was unexpected. Maybe there's an announcement that comes that says OPEC agrees to continue production cuts. If that headline came, boom, you'd see oil break the resistance. So I better have a stop loss up here, maybe at 46. If oil hits 46, then something changed, right? So I'm going to add my stop loss at 46. If it hits 46, I'm out on this move. If it hits here, I'm taking my profit, 45.25. Okay, so, and I could have just done that from the beginning, but I'm explaining it step by step. So, so there's my move on oil based on the fundamentals today with technical reasons for where to get in and out. Okay, it's already trying to push down off that resistance. Stop loss here. What kind of pending order could I put up here in case the news changes? If it breaks this resistance, there's got to be something fundamentally that happened that was good for oil price. I could put a buy stop pending order right here, right? And if it breaks this support, boy, there must be more doom and gloom coming. I can prepare a sell stop pending order down here. So my current move is to buy and sell off of here. And if it breaks the support, I could be in with a sell stop. If it breaks the resistance, I can be in with a buy stop. And for that matter, I can put a pending order here to buy off the support as well. So I can put a buy limit pending order to buy off the support, just like I sold off the resistance, and continue to trade that way. If that goes bad, it would hit my stop loss on the buy off the support, would hit my stop loss, close the buy, and open my sell stop. Okay? So very nice way to trade on something that's ranging. Buy and sell off the resistance and support. With pending orders, you can prepare a buy limit now down here. Prepare for the unexpected breakthroughs with a buy stop and a sell stop above and below those levels. Okay? Just some ideas that you could employ. I mentioned we would take a look at the other type of fundamental news that's been occurring today. So if we look at the economic calendar, if you go to some place like investing.com, yeah, talk about a late headline. Dow turns positive as value stocks get vaccine boost. You know, we already knew that, right? We saw it coming hours and hours ago, really. We didn't need this late headline. Economic calendar. These are the other type of fundamental news, right? Some nice announcements today out of the European Union. South Africa had some nice GDP numbers come quarter over quarter, nice increase. So you might look at this and say, okay, decent numbers, economic sentiment out of the European Union, better than expected. So we might find an opportunistic entry point with the euro or the rand. Okay, so if we then go back and say, okay, the rand had good news. Overall, South Africa's been a mess, and the rand has been weak over the year, but it really strengthened lately against the USD as the USD weakened. So you might then take a look and say, okay, USD, South African rand. Look at that. USD is down even further, 14.9. If we go to 1-day candles, 1 week candles, look where the rand was earlier this year. You go back to February, the rand was almost 20 to 1. 1 USD was worth almost 20 rand. Now 1 USD is only worth about 15 rand. Okay, so you could be looking at opportunities. Now, if the US passes stimulus, you might see this drop even further. The USD weaken further against the rand. What kind of pending order could get you in, say, at this support level here? You see support. It hit and went up, hit and went up. If the USD reaches this support, what kind of pending order could buy, say, from right here? And it very well might, the stimulus this week, if it passes, could be the impetus to push the USD down towards this support level. What kind of pending order then, since the fundamental news says USD might drop more, maybe don't buy on USD ZAR yet. You can if you want to, but you also could program to buy from this support level, expecting the USD to reach it because of stimulus this week out of the US. What kind of pending order would buy from this price level? For those of you experienced traders. Tobogo, oh, you left. He asked a question. I think he got disconnected with his internet. Yeah, buy limit. Exactly. Thank you. Buy limit, buys from a lower point. Again, with the web trader platform, let's do an example on web trader, because here, if I want to buy from a lower point, I go pending order, buy limit. I have to know that it's a buy limit, and then I program my pending order to buy from, let's say, 14.25. Okay, 14.25 place. Okay, there's the green dotted line. There's where I buy from. I could put my stop loss right below that support. So if it breaks it, I get out. My take profit could be anywhere I want to wait. You know, take profit could be the first resistance level up here, about what, 10 to 1 ratio. If it even goes back up to 16.2 or so for a take profit, stop loss only needs to be a small risk below the support level. If it breaks the support, you could get out, right? So that's an easy setup. Now, if I use the web trader, I can do USD ZAR. ZAR is South African rand for those of you that are new. ZAR. Okay, here it is. I've added it to my favorites list then. And let's say I want to buy on it, but let's say I want to do a pending order. So instead of having to pick what type of pending order, with this, you just put execute when price hits. That's it. I can put my price, execute when price hits, and it makes it the right type of pending order. That's it. Very simple. I don't have to call it a buy limit or a buy stop. I know I'm buying. I clicked buy. I tell it the price I want to buy from and click buy, and it prepares the pending order as the right type, as a buy limit. So it simplifies things here when you're setting things up from the web trader. And I don't mean to knock the MT4. I love the MT4 platform and the MT5, especially for the charting. I think the charting maybe is a little more advanced than the web trader with being able to draw more lines and do more things with custom indicators. By the way, the web trader is going to be improved in those functionalities too moving into next year. So for now, you might use both. Web trader for setting up certain trades, pending orders, for using AvaProtect for the advanced features it has there. And you can use the MT4, MT5 for your charting, for your custom indicators, etc. Okay, so I never like to leave my pending orders, even though it's a demo account, unprotected. So by the way, USD ZAR, any currency pairings you can put AvaProtect on as well. So let's do that as an example. So if I'm afraid it'll hit my stop loss, then go the right way, right? If I put my stop loss down here and it hits it, it closes me at a loss, then it goes up the right way, then I'm mad when I wake up the next day and I say, oh, it hit my stop loss, then it went the right way. So what you can do is, if it's a market move, you can, if you catch it in this area, then you could do a buy position with AvaProtect on it for 1 day, 2 days. In case it breaks through, then it goes up. The pending orders, unfortunately, you can't put AvaProtect on a pending order. I was just thinking for a second that's what I was going to show you, but I caught myself. You can't put AvaProtect on a pending order. You'd have to catch it when the price is down here. Otherwise, standard pending order with your stop loss. And so let me modify. Where would I put my stop loss? Probably 14. Let's say 1399, 1390. So 13, just to get past that round number that sometimes it likes to test before reversals. And my take profit, maybe this first resistance level here, 16.19, 16, little before the resistance, 10. Okay, modify. So there I am. I've got my take profit just before the resistance. You see the red dotted line. I've got my stop loss below the support. Maybe I want it a little further below, so I can click on it and drag it. There, stop loss is below this low point, below the support level. So I enter near the support. I have about 5 times more potential profit compared to risk. Four times more maybe potential profit compared to risk. If I'm a longer term trader, maybe I have my take profit up at the next resistance level, and I could do a partial close when it reaches the first resistance. Okay, so you have options. You have options there. Natural gas, Amir, we don't have time to go over it. Unfortunately, we're about out of time, but I'll talk a little bit about it. Natural gas pushed down because of the mild winter, some economic fears with the virus. It might create a nice entry point. We could quickly look at Tesla that I mentioned and natural gas without too much time spent on them. So let's find Tesla, which I think maybe is up near the top of my listings. Tesla, where is it? Teva. By the way, let me show you something. If I click hide all, this is a good thing to show you. And then I go to symbols and search by asset type, stocks, USD. Now I can find Tesla, stocks, USD1. Here we are. Alphabetical order, Tesla. So now I can say show, and voila, there it is, Tesla. So I can, when I click hide all, it gets rid of everything except the ones I have charts open for. Then I can go to symbols, show you again, and find the one I'm looking for without scrolling through the whole list. And there's Tesla. So now I can bring up Tesla and I can show you indeed today Tesla gapped down. Let's go to 5-minute candles. Tesla gapped down today. And because it's a strong company, it gapped down for more of a business decision move. It's no wonder it went back up. And you could maybe take advantage of a recovery here on Tesla. A little late, it already made up the ground that it dropped from, but we understand the movements here. As soon as Tesla dropped down, you could have taken advantage. It's a little late on taking advantage of that dip. And if we look for natural gas, I can add natural gas. We go to the proper grouping. We want energies. Here we are. Natural gas. We have different futures contracts. Okay, natural gas, plain as well. So let's show. And here's natural gas. Okay. We see the drop. This one looks like you could more take advantage of the opportunistic price. So we see it's quite low. 1-day candles, there we are. On the 1-day candles, you see I had to go past 1 hour, 4 hour, 1-day candles, there's a support level. Price hit here and went up back in September, and this was a gap up. So it could break below this support or not. But if you put your stop loss below this gap here, maybe that's your move. If you think natural gas should go back up. So if I'm taking a shot on natural gas to take advantage of the low point, maybe I buy now, and then I look at the larger candles and I say, okay, stop loss is going to be below the bottom of this gap where the price went up through a weekend. So or from 1 day to the next, I should say. So if I look here, I put my stop loss maybe at 2.25. Stop loss 2.25 in this example. Take profit, back up at the resistance. It's winter time, right? 2.97 just before the round number. Maybe take profit. Might be some resistance naturally as it reaches the whole number 3. And also there's a technical resistance level here. Resistance down, resistance plunge. Okay, so now we've got a technical reason and a fundamental reason to buy, and a technical reason to take profit maybe at this resistance level here. All right, so hopefully that helps you. Tobogo, it's good to see that you're back. We do have mentorships. We do have support. So talk to your account manager. If you don't have an account manager that can kind of mentor you, then ask for one. Contact our customer support. Amir, I'm glad you're still here. I didn't know if you had left. There's your support level at the top of this gap. If it breaks below the bottom of the gap, maybe your stop loss is down here, and it looks like an opportunistic spot for natural gas in the wintertime to maybe go back up from a nice low point. All right, everybody. Thank you for joining. Looks like our crude oil moves up and running. We're in profit here, and natural gas is in a small profit. So, okay, we've got a couple pending orders that could kick in. On moves like this, we only need to win 1 out of 3, right? If you take the right trade sizes with the risk reward, and you could be in nice profits overall. All right, everybody, thank you for joining. Till next time, good luck with your trading.